ADP jobs report surprise. What it means for rates, markets, and mortgages. The latest ADP National Employment Report signaled a slowdown in the U.S. labor market. In November, private payrolls fell by 32,000 jobs. That was weaker than expectations and followed an upwardly revised gain in October. ADP also said job creation has been mostly flat in the second half of 2025, and wage growth has been trending lower. Where the weakness showed up matters. Hiring fell in manufacturing, professional and business services, information, and construction. Some areas still grew, such as education and health services and leisure and hospitality, but not enough to offset the declines. The biggest takeaway is small businesses. Small establishments cut about 120,000 jobs. Medium-sized companies added about 51,000, and large companies added about 39,000. This suggests smaller employers are feeling pressure earlier, usually because they are more sensitive to high interest rates and weaker demand. Wages are still rising, but more slowly. Pay for workers who stayed in their jobs rose about 4.4% year over year. Pay for workers who changed jobs rose about 6.3%, down from the prior month. Very small firms showed noticeably weaker wage growth than larger employers. Why markets care right now? With the Federal Reserve meeting on December 9th and 10th, investors are watching any timely labor signals. A negative ADP number supports the view that the economy is cooling, which can make a rate cut more likely and can reduce the risk of a very hawkish message from the Fed. What usually happens next? When hiring weakens and wage growth cools, Treasury yields often trend lower because markets price an easier policy ahead. Mortgage rates can also respond because they are closely linked to bond yields. This is not guaranteed, but it is the typical direction when the labor market softens. What to watch next? ADP is a useful signal, but it does not always match official government data. The key question is whether other indicators confirm a broader slowdown, or whether this was a one-month dip. If this was helpful, please subscribe to our channel and click the bell so you do not miss our future videos.